We average between 200 and 400 hours of research per name.
It's pretty
And,
big.
but I mean, if you think about it, I mean, okay, let's frame this properly. Yeah, there's training and experience involved. You have to understand some accounting and financial reporting. But other than that, anybody could do what I do. I don't have any special resources or information at all. I'm getting, everything that I use, anybody else could get online and obtain. So it really is just the effort. And I'll be honest. I mean, generally speaking, after I've put maybe 10, 20, 30 hours into something, that's about all it takes for me to feel like I've got something going on. There's probably an attractive opportunity there. I mean, on my radar, my initial impression has been confirmed. And what I do, and in many ways, I view this as a fiduciary and even ethical obligation to my investment partners. The next 180 hours is making sure I'm not wrong and and I'm protecting their money. How hard are you willing to try to not lose money? That's really the question. I try really hard to not lose money. And our hit rate for our fund, which is now over 10 years old, is extremely high. Historically, our impairments, actual losses, is extraordinarily low. But if you think about it, things can happen that you couldn't predict. COVID, global pandemic. Uh, but we're all human, which means our judgment is flawed, which means of course, we can all make mistakes. The question is twofold. How effectively can you minimize the number of mistakes you make? And based on that process of minimizing them and the standards that you impose, how much money do you lose when you do make a mistake?
Mm-hmm. Yeah, and I'll add on top of that, it's okay to make mistakes, but someone told me this in another episode, but I think it was Soros that said it at some point. But it's okay to make mistakes. What is unacceptable is not learning from your mistakes and making that same mistake twice. But yeah, coming
Yeah.
back to the hours, oh my God, like 200 to 400 hours per name. I mean, by the time you stop researching, you know the company better than the CEO. For God's sake, that's insane. Wow.
Yeah. I mean, I've testified as an expert witness for a reason. I was brought in by the DOJ and the SEC to testify in the only successful prosecution of a bank CEO following the great financial crisis. And they had gotten a hold of my research, and they just wanted to put me and my research in front of the jury. I just went to I was in court for a week or so, and I just told them what was there.
So they contacted you because they knew you had researched this name and they knew you had researched it in depth and that there was pretty much no other analysts out there or very few that would know the bank so well and inside out as you. Is that it?
Yeah, I don't know how they originally came across me. I mean, I guess I was probably on the shareholder list, and then they saw my research and they realized that, I mean, nobody knew that bank as well as I did.
Wow. Well, that's pretty impressive.
Yeah, I mean, and
yeah,
I appreciate that, but I'm emphatic. It's, anyone can do the work. In a lot of ways, the question simply is, how badly do you want it?
yeah. Yeah, everyone can do it, but not everyone is willing to put so many hours in there. I think that's definitely what sets you apart. That grit and that almost obsession with the names that you decide to cover and take positions on.
Yeah,
It's
I
pretty
appreciate
cool.
that, and I won't dispute that, but I think, one of the things for me very early on in my career, I noticed something that very fortunately I noticed something. And that was that there are a lot of really smart, well-educated, well-trained, pretty hardworking people in investment management that were horrible investors. that got horrible results. And I started thinking about why that was the case. And most of them were really bad investors and really bad performance. And it came down to several things. The most important, I think, which is something I talked about, I was invited to visit Hillsdale College and talk to the students there who are in business or finance about how my liberal arts background influenced my career in investment management. They said the one thing that people never talk about that's so critical is just fundamentally good judgment.
Mhm.
And if that doesn't seem self-evident, think about how well you would do if you had consistently bad judgment. If you're cursed with consistently bad judgment, you are destined for failure, right?
Mm.
But then, you take it down another layer and you think, well, what is good judgment about? Discipline, patience, maintaining a calm, a detachment, an objectivity, not getting emotional, not getting greedy. A lot of it comes down to character traits. And I've got a book coming out next year about our investment approach. And
Oh,
the bulk of
nice.
it is dedicated to specific investments we've made over the last decade and a half. But in the introduction, this is what I talk about. It really does come down to basic character traits because the rest is really just arithmetic. You have to
Mm.
understand the labels on the other financial statements and what they mean. But as you said, you can go out and learn it, and you can, learn it just by starting to analyze different investments.
So
Reading an annual report and that sort of thing. It really does come down to those traits.
mm,
And
we'll have
having
one
maybe,
reader here
the
for
200,
sure.
200 hours of research, well, yeah, I mean, I guess there's some discipline involved there. But again, my edge is my curiosity, right? I actually
Mm.
want to understand. And it's one of the things that in the panel discussion I was involved with up at the SEC in Washington about a month ago. One of the things that I talked about was, there's no reasonable person standard that's imposed on, investment banks, investment management firms, or Wall Street analysts in terms of what's the minimum they should do. I mean, is it professionally responsible or ethical to recommend investing in a company if you haven't even bothered to read the annual report? The most important, comprehensive, readily available piece of information out there. I've always thought that, I would love to get I have a background in law, representing some aggrieved investor and have, the head of the investment firm or the analyst who made the recommendation say, well, what did the annual report say? How many annual reports did you read?
Mm.
You're representing yourself as an expert. Of course, you've read all the filings, haven't you?
Well, I would expect so. If it's an analyst covering the stock,
But a
that's
lot of financial
the base.
advisors and these people, they actually have no idea what they're talking about. They're very good at sounding like they know what they're talking about, but they truly don't.